I was having a conversation with a friend of mine in the tech space in Atlanta. I think it was last week, actually. And it was a very interesting conversation. He's a second time entrepreneur. The first go around didn't go as well as he had hoped, but he's doing what I think is a very commendable thing, which is going right back in to apply the lessons he learned the first time in search of a better outcome. And I've written about that before, so I'm not going to belabor the point. Suffice it to say that I think his failure makes him more bankable now because he's applying the lessons that he learned the first time. That's a very expensive tuition. And we were talking about stock options, and he's getting a lot of, call it input, I don't want to call it pressure, but input from, in particular, his advisors that he should create an option pool with a standard kind of 10% of all your shares and start granting options to employees. And he's really kind of rethinking that because he didn't like the way the cap table wound up treating him in his last venture. And he really didn't like having to spend the money and the management energy on compliance. And compliance is significant, at least in the United States. I can't speak for the rest of the world, but in the United States, it's significant. And so we were talking about that, and he kind of just wondered, would it be so bad if I never issued stock options or I issued them very sparingly? And I told him no, it wouldn't be so bad at all. In fact, I think that the world is operating under a false assumption that stock options are all that valuable in terms of attracting talent and particularly in retaining talent. Now, when we're talking about publicly traded companies or even companies that are mature, likely to be acquired soon, likely to go public, different discussion. But most of the world aren't those companies. Most of the world are companies like my friends, which is a startup, minimal revenue, making things happen. And he's questioning whether or not he really wants to spend the time and expense, legal expense, accounting expense, frankly, valuation expense to issue these options. And what I shared with him is what I'm going to throw up on the screen is this really cool article that was published back in 2018 in the Journal of Financial Economics. And the Journal of Financial Economics, in case you're not aware, is one of the three leading academic journals in finance that comes out of the United States. If you are going for tenure in a significant university in the field of economics, this is one of the three places that you publish. So I take their research with very high regard. And I'd encourage you to buy the article. I did. Sometimes you just have to buy articles, and that's okay. But the upshot of the article is that the researchers have found that stock options reduce turnover by a whopping 20%. And I don't know if that surprises you. It surprised the heck out of me when I researched this a while ago. But it kind of makes sense. If you're a startup, first of all, most startups fail. And employees are smart enough to know that. They know that the stock options are sort of flyers, if you will. And they know the likelihood that the options are ever going to be in the money, worth anything before they expire, by the way. They understand that. They and their families understand that stock options are great, but for the most part, you can't turn them into college tuition. You can't turn them into a house down payment. You can't turn them into a car, vacation, contribution to a retirement fund, at least not right away. And so when push comes to shove, stock options aren't that big a retention tool. Now, there is one argument that I think the article could have discussed more, and that argument is that the employees that are leaving are probably being offered stock options by somebody else. And that may be true, but that gets into the discussion of attraction versus retention. But the reality is that if you're banking on stock options to be your big retention tool, it's probably not going to work out as well as you would hope. And so that means a couple of things. First, it means you're not killing your company by not issuing stock options necessarily, especially if you have the team that you want already in place. Chances are the really key ones already have founder shares, and maybe it makes sense to grant a few of them of the really key one stock options in case it kind of helps at the margin, but it's only going to help at the margin. I think the second thing is it means that you need to pay more attention to the other elements of the comp package. Do not assume that stock options are going to just solve the retention problem for you. At some point, most of your employees need cash, unless they walk in already wealthy because they've had another exit. At some point, cash is going to have its say. It always does, whether it's employees or for investments, cash just has the final word. So don't fall into the trap of thinking that stock options are just going to solve the retention problem for you, because they just aren't. And then third, this doesn't mean that you just forget about stock options. An increased retention rate of 20% is still better than nothing, but it impacts at the margin. So don't assume that just flooding your employees with stock options is going to solve turnover over things like compensation, culture, working conditions, things of that nature. And again, at the end of the day, employees are insiders to your company. and they're going to have a view, probably a pretty informed view, as to whether or not those stock options are going to wind up in the money. So the bottom line here is think carefully about issuing stock options. They are not the silver bullet when it comes to retention. The data is out there. There's other data that supports this as well, but I want to keep this video relatively short. But if you Google it, you can find it. So that's what I think. What do you think? What has your experience with stock options been, either as an issuer or a recipient? Have you found that it impacts retention as much as you would like? Did you find yourself staying in a job longer than you would have ordinarily because of your stock option position? Let me know in the comments below.